In this video, I want to talk about a simple price and volume little strategy that I've recently been using. I've always used it, but in this market, I've scaled it up and been using it a lot more because it's just been working the best for me. I'm always one to stress that different conditions in the market bring different environments, and we must adapt and change how we trade, keep the core concepts the same, but tweak our entries, tweak our exits, and tweak our confirmations to fit the current market conditions. I said it in my past video, you wouldn't go outside in the wintertime with no shirt on, or you wouldn't go outside in the summertime with a winter jacket on. And different conditions tell us where the weather is, how warm, how cold it is, and what we need to do to adapt to that. I'm going to show you some trades that I actually have taken. Some are going to be winners, some are going to be losers, and I'm also going to show you some trades in my Discord community. But before we get into it, I recommend everybody watching this to follow me on my Instagram at Ameritrade. This is my only account. The link will be in the description below. I post daily trading recaps on here, along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. But now let's get right into the trades. So I'm going to show you a bunch of the pre-market plans in my community. This is not to show you how accurate or boast about how right we were. This is to give you context of what we were watching, and I'm going to explain why we were watching it so you could put pieces to the puzzle together. The Discord is only available for Investotrade members. I know I'll get a bunch of questions after making this video. However, the key concept, ever since middle of December or even the start of December, we've been watching three different very key levels. And as the time I'm recording this video on December 29th, since early December, these levels have not changed at all. And it's going to be the basis for this video. Playing levels and reacting to what the market does at these levels. There's no such thing as predicting where the market's going to head. I don't wake up one day and say I'm bearish or I'm bullish. I simply react to what the market gives me. It's a storyteller. When it's open, it's telling me a story, and I must use context clues in order to take trades. If we try to predict what the story is, we're going to get it wrong. Instead, react to what it tells us, and this is how we take high quality setups. The levels in the market have been completely unchanged. So the first level that we've been watching is 3927 to 3954. Now, where we got this level from was back on November 10th. And every single time we've hit 3954, 3927, which is now this pink box. I'm going to explain why it's now pink. Instead, it was once green because it was once a demand zone. But every single time that we have hit this zone, the market has bounced off it one time. A few weeks later, hit it another time, rallied. 3, 4, 5, 6 other times before finally breaking it. So if we zoom out here, this 3954, 3927 level was also confluent with the bottom balance range ever since the start of November, where we consolidated above 3954 and below about 4100. Now this remains key because if we break below 3954, 3927, this pink box, which was once green, should now act as support because this is an area of major confluence that it has found buyers every single time in November and December that we hit it, we bounced. Now that we're below it, you would want this level to act as resistance. The next level is going to be 3867 demand. If you want to be precise, it was 3866 and 3/4 demand. This also formulated from this rally up back on November 10th. We had a very, very strong move up, and this is where I got 3866 demand. And looking back at your charts, if you've been following me on my Instagram, on anywhere else, you know that this 3867 level has been so key the past 3-4 weeks. And then the third level is 3805. This was our downside target. This is where we wanted to be very cautious if we were short. So the first trade was on December 19th, and scenario number 1 from the pre-market plan was as long as we could hold below 3927, I expect 3867 demand to be tested again. It should offer some support, but if the support fails and selling pressure is heavy below 3867, I want to play short targeting 3805. those are my levels of interest, and I react to what the market gives me at those levels. So the day prior, 3867 actually acted as support. We got an end of day rally. Then overnight, we were pretty flat. The market opens on the 19th. We sell off into this demand zone, and we do get a quick little 20-point rally off of the zone. However, the move failed. Selling was very, very heavy, and I took the market short once we broke below 3860. I was risking 3870. It was about a 10-point risk, and I knew once we got below this 3866 level, there is no support and there is no demand until 3805. So it was basically game on until that level. Then the market sold off, and as we started consolidating and moving sideways, I actually got out of my position, which was a stupid mistake now looking back and reviewing this, because look what happened at the end of the day. We kept selling off, and eventually in the overnight session, guess what we hit perfectly? 3805. So essentially, I got short below this level, 3867, stop loss above 3870. I exited this trade prematurely before my stop loss triggered, just because I expected or thought the market to bounce. It was the wrong decision, and I could have had a nice little 40-point sell-off and the day if I followed my plan. Now on December 20th, the following day, our levels remain the same. We bounced off of this 3805 demand zone perfectly. If anybody was in short, you could use this level to exit, cover your position. If anybody's looking to open up a long position, you could also do so here, as this was the pivot low at 3805. So scenario number 2 was I find it hard to be bearish above 3805 due to the reaction we saw overnight. As long as we remain above it, we may see a relief bounce. Scenario number 1 was the rally is convincing only if we could reclaim above 3867. So now basically I could use this as context. This is basically telling me the weather outside. Okay, I'm looking out the window and it's snowing. So I'm not going to go outside with no shirt on. I'm going to go out there with a winter jacket on. And this is how I basically use these levels and play this little strategy. So now that we know that the weather is cold outside, I'm going to do what's necessary to be warm. And what do I do here is I'm not getting on the wrong side of the market. At 9:49, 19 minutes before the market opened up, I said I'm spotting some potential buyers here on the tape. This is what I'm watching for a short-term scalp for a reversal to the upside. So this is very important. This goes back to the first point I made in this video, is react to what the market gives you. This was not a level that I had before we opened. This was new information that the market presented to me. It was reading its book. It was reading a chapter in it, and I reacted to what it provided me. What it provided me was some buyers on the tape at 9:49 Eastern time that I said, if we can test 3825 while maintaining above 3818, I'm interested in playing longs. If we can reclaim above 3833, my target would be 3855, 3860. So what essentially happens here is the market dips down perfectly. And at 9:49, when I sent this out, this is what the market looked like. We were holding 3825 perfectly. I knew if we held 3818, we would most likely rotate back up. If we rotated back up above 3833, which is this level right here, and this is exactly where I got long, I knew if this happened, I could put my risk below the low and target 3860, in this best case scenario, 3867. So where I got long at this yellow oval, buying volume came in, we followed the plan, and we got that strong rally into 3860, where I exited this position. I could have held it and maybe got out at 3867, but I followed my plan, and I'm reacting to the story that the market is telling me via spotting buyers on the tape using the time and sales level 2. And as you could tell, that day, that 3867 level acted as resistance perfectly. Overnight, we held it very well. The scenario that day was number 2. If we could hold above 3867 in the first hour, I want to focus on longs, targeting 3898, where I expect to find sellers. I cannot be overly bullish below 3927. So again, the weather analogy. This is telling me that, okay, now it's sunny outside. I definitely don't want to go out there with a winter jacket on, or else I'm going to be sweating like crazy. It's giving me direction. It's helping me know which side of the market I should be on. We're above 3866, it's 3867, so I should not be looking to take the market short. In fact, I should be looking for clues or ways to play the market long. And honestly, I did not see a reason or a valid confirmation at this moment for me to get long, although the plan called for it. And we did get that very, very strong rally. missing our 3927 level by just a few points. Now the following day on the 22nd, we had a new demand zone that formed from that rally yesterday. Scenario number one was we were watching this level to be supported from buyers. If it fails, we do not have much support until 3805. So essentially, if this 3880 level failed, we had rooms down with no support from buyers or no demand until about 3805. Then about an hour before the market opened, we did get a sell-off and did not find buyers at that 3881 zone, so I updated my plan. I said my new line in the sand is going to be 3867, 3860. So at this point, what I did was I removed this demand zone because we did not find buyers, and in fact, we broke below it. And now my next area is 3867, which is that same level that I knew if we could get below this, there is nothing stopping the market from selling off. So if we get below this, we can see a sharp downside move into 3833 and then 3805. These are the same levels we've been watching all week. There's been absolutely no changes to anything. Recycle until there's no reaction at them. And then guess what happens? Equities were very weak. The VIX was rallying. The S&P, the NASDAQ was selling off. Heavy volume. As you can see, the nice selling pressure drilling. Lower lows, lower highs all day. And I sent in another update to members about 45 minutes in that if we can close below 3850 in the next 15 minutes, very likely that 3805 will trade at some point in the near future. At that moment, we were about 3839. So again, this is real time, no hindsight analysis, just by playing levels in the market. Inside of this recent range, there has not been any new supply or demand imbalances that formed, which is why I've been using these levels because they've been working out so well. When I sent out that update that if we do not close above 3850, we're going to see a 50-point sell-off to the downside, guess what happened? Lower lows, lower highs, continuous selling pressure, and this was a very big winner for me this day, following the trend in the market and understanding which way the market is telling me to go. And then guess where we bounced? Right at that 3805 to about 3790 level. And this caused a little end-of-day rally after that morning sell-off that we destroyed. Then the following day, after we bounce off that 3805 level, guess what happens? The market opens up. This is the day before Christmas, so it's a holiday. Volume was lower. Not a lot of people were trading. Guess what happens? We had pretty dead action, but guess what acted as resistance? 3867. 3 or 4 times intraday. Now, it's after Christmas on the 27th, and the market opened up really the same levels, and we had some weakness at the open below our 3867 level. Now, at this moment, I really couldn't read the context. I didn't know what was going on, and at the open directly, we broke below this level, and I didn't see a valid reason for me to get short. You have to understand one thing, that is, if the market is at your level of interest, whether it be a level of support, resistance, supply, demand, something that you see on the tape, a lot of the times, especially with these levels, not only was it because of a major area on the chart, it also lined up with things that I saw on the tape, level 2, time and sales, and other order flow tools. So when I get major areas of confirmation or confluence with each other, I know it's going to be a very valid and high quality level. And I try to tell members continuously in the Discord about these levels so they're aware of them. So I'm basically their weatherman and they don't go outside when it's 20 degrees outside. You know what I mean? So in this case, the market opened on the 27th. I didn't see a reason to get short below this level. Just because we hit a level also does not make it right to get long or short. You need to let the market tell you what to do at your level of interest. So I didn't see nothing here. Then the market consolidates and I send an update at 10:18 when the market looked like this. What I saw was the market came down, heavy selling pressure. A lot of people were getting into shorts, meaning as we were coming down, I saw some nice volume patterns. A lot of traders were selling, yet someone was there passively looking to buy the market. And I kind of saw this as a red flag, especially so close to 3867. So I said here, spotting some buyers at 3937. As long as we remain above 3847, I expect a short-term reversal into 3867 again. And if we could get above 3867, we're going to see 3900. I am now long 3848. This is at 10:18 when the market looked like this. I got long on the pullback, the rally up, strong market buying, and then we got that push up into 3866. And to be honest with you guys, the market moved in my favor right away, and I didn't sell as soon as we hit 3867. what I did was I sold 40% of it because I was expecting more upside if we could hold above it. So I'm out 40% as soon as we moved up into this level, and I'm holding 60%, which is a larger portion of my position in case we want to start moving higher. Eventually, we did not get that. And as the market failed at 3867, and now it acted as resistance once again. And as we came lower, I got out the 60% of my position for a 2-point gain after selling 40% of it at that 3867 resistance. I was basically trying to hold onto a runner, and this did act as resistance. We never got those runners, and I exited for a smaller gain as the market did not move in my favor. Then on December 28th, a day before I posted this video on Wednesday, same thing, 3867, 3875 now. Scenario number one is if we could break out above this, I'm interested in playing long, targeting 3,900. If we're successful above it, Tesla's strong, we're going to rally. And number two is if we fail at this resistance, I do expect the market to sell off, test what's out there at 3,845, and below 3,845 opens the door for 3,805. So what did I do? The market opened up, and the same level that we've been acting as resistance every single day for the past 2-3 weeks, I took the market long inside of this level for the first time at 3868. Tesla was strong, VIX was weak, NASDAQ bounced off demand, Apple bounced off demand. This was a great trade. I had all my confirmations, everything looked good, everything was aligning for the bull side. So I took it long, very, very minimal risk. As soon as I entered, the market basically consolidated in this area. Then we got a sell off, and I exited this trade once we started moving lower, got long inside of it, speculating that it was going to break. We never broke, and I stopped out on the move down. Now, in hindsight, this could have been a great area to short the market instead of getting long like I did. But that's in hindsight, so I didn't sell my long position and immediately get short. I know a bunch of members took this trade to the short side inside of this supply zone or this resistance, and it worked out very, very well because guess what happened? After another retest of this, we tested 3845, and then the market continued to sell off. Now, if you follow from the plan, if we got below these levels, it opens the door to test 3805 again, which could be a good downside target. So after I stopped out of this trade at 1034 in the intraday commentary tab, I said sellers have one more chance. This will come at 3845, it was meant to be, to 3833. One last resort to hold price higher. If it gives up and it fails, we should see an exaggerated sell-off into 3805. The market came down. There were a couple other scalps in this area, but my best trade that made up for this earlier loss was this setup once we broke below 3820. So essentially what I saw was on this sell-off, remember that 3833, 3845 level that I mentioned? Once we got below this level and failed to find buyers, which has been a common theme, still below 3866, every single rally up below it has failed and it has lacked continuation. So even at this demand zone, we've lacked find buyers because we are below 3867. We rallied, and guess where we found resistance? I seen this, and obviously in hindsight, this could have been a better entry once it did act as resistance. But I waited for this little flag out, this consolidation, and as soon as we started moving lower, right after 3 o'clock, I took the market short, stop loss above the previous high, targeting 3805. We got that a little end of day sell off into 3805, and this made up for my earlier little 15-point loss on that morning little long play. So these levels have been in play pretty much all week. Guess what happened the following day? The market's still trading right now. Did not take any trades on the 29th. Yes, we broke above it, but I did not trust the volume and the momentum in the market. But guess where we found the low? 3805. It's actually the low of day yesterday, and it's the low of the overnight session. We rallied up, and now we're testing above 3866. But this is basically how I've been trading, how I've been able to get on the right side of the market, how I've been able to use the context and take high-quality trading setups, not being on the wrong side of the market, using price and volume. I've been basically using supply and demand as targets versus areas to get long or short, and I've been using other tools like the time and sales level 2, bookmap, and other order flow tools to basically tell me when to enter and give me an understanding of buyers and sellers intraday, along with basic support resistance that I get from other tools and other factors. But I'm going to end the video on that note. I hope you all got some value out of this. I've been meaning to make a video on it. I think I'm going to add a section to the course about other levels of interest and how I plot other zones and how I plot other support and resistance, different than normal support and resistance that everybody's used to. A lot of my levels come from the tape and actually reading orders that come into the market that play a significant role. So I think I'm going to make some changes to the course and add them to that. And going into the new year, the prices and the structure of the Amertitrade program will be different. So definitely take advantage. But I'm going to end the video on that note. I would appreciate a thumbs up, comment if you have any questions, but peace out.